Welcome to the Greater Victoria Real Estate Show. I'm Jane Johnston, realtor here in Victoria, and this is a show where we cut through the noise and talk about what's actually happening in our local market.
I'm Andrew Plank, also a Victoria realtor. We'll talk stats, timing, neighborhoods, and what we're seeing behind the scenes.
And I'm Jen Lowe, mortgage broker. I'm the numbers person of the group, and I'll chime in with the mortgage side.
Each week, we break down what the market means for you.
All focused right here on Greater Victoria.
No hype, no pressure, just honest conversations, local insight, and practical advice.
Let's get into it.
Good morning, everybody. It is Wednesday, July 15th. Welcome to the Greater Victoria Real Estate Show. I'm Jane Johnston, and I am here with...
I'm Andrew Plank. I'm with the Vibe Collective at Royal LePage, and I'm practicing my stunned look.
I'm Jen Lowe, mortgage broker with Dominion Lending Center's Modern Mortgage Group. Nice to see you guys.
Nice to see you guys too.
See you.
We were just saying that before the show started that we had some feedback that just after the intro music, we all look a little stunned. So
we do know it's coming, though.
We do. It's a surprise every time.
So what's going on in everyone's week? Actually, why don't we get started and we can talk quickly about what's happening with the Bank of Canada.
You bet. Yeah, so as expected, the Bank of Canada has left its overnight lending rate unchanged at 2.25%. This is the sixth time consecutive rate announcement that there hasn't been a change. So definitely more stable, which is nice. Question is, why are rates staying put? Our economy has shown signs of improvement over the past few months, even after being hit by the higher global energy prices stemming from conflict in the Middle East. Economic growth has been stronger than expected recently, and policymakers don't believe that pace will continue indefinitely. So they're seeing this growth becoming more balanced across the different parts of the economy, rather than relying on a few sectors. The other piece that's kind of exciting is that our inflation, the inflation rate, it seems to be very encouraging. So it's expected to ease if the inflation rate eases, then we could see a decrease in interest rates, which would be, of course, lovely as well.
Now, of course, a lot of people are still waiting for the
inflation rate.
Oh,
What is
should I do my stunned look? What is the current inflation rate? I believe it was up just over 3%. And the target is between 2 and 3. The reason, usually when inflation is above 3%, that triggers the Bank of Canada to raise rates. However, because of what was happening in the Middle East, they've chosen not to, and we're now seeing this ease and what's expected with the inflation rate as well.
I think because there's nothing we can do about what's happening in the Middle East. Andrew.
My turn. I was just going to say, the current rates relative to historical rates, because we're talking about, we're waiting maybe for rates to come down, or it's really nice that they're stable and it's really nice that they're not going up. But a lot of buyers are, consistently, there's always a population of buyers waiting for the rates to come down. How are we looking from a historical basis on rates? Like our current rates versus the average rate over time?
I'd say we're right there. I mean, people want that 0.99%, 1.99%, but that's not ever going to, knock on wood, that's not in our future. When just speaking from a personal standpoint, when I bought my first house back in 2001, the interest rate was 5.5%. We're under that significantly. So it's a funny thing. We're seeing there's some fixed rates now under 4%. And when you 4.01 versus 3.99, even though it's a difference of probably $3 a month, that mindset piece is huge. And that 3.99 just sounds so much better.
Right. Right.
It's like it's the same thing like pricing a condo at $499 versus 500,000. It just is a different number
Yeah.
in people's
Brings
heads.
you, yeah. Perceptually, perception is reality.
Yes.
For sure. Yeah.
Well,
Okay.
I will say, just looking at the market, I'm seeing prices coming down, I think.
Mhm.
Anecdotally, it's funny because we wait for the stats to come out at the end of the month, and I always wonder, is it the stats projecting my opinion, or am I projecting my opinion on the stats? And I think that there's lots of opportunities right now, and
And
100%.
interest rates good.
and to pull a matrix, there is no spoon, or what's really going to mess with your head is, do this when the stats come out, does that then impact what buyers do in future? And so it's a self-fulfilling prophecy. When we see, good news coming out, do people take that and run? And then we get better good news because people are following the good news. When bad news comes out, do we get more bad news because of, like, what is the effect of the news on the actual market? And it's profound.
And what I see is that people can get into the condo market now for less than what they're paying for rent.
Yes.
And that's huge. It's a great opportunity for those first-time home buyers to get in at this price point.
That tells us that condo pricing is not necessarily going to go lower. I mean, it can, but the pickup point where buyers start to pick up this inventory has likely been reached, because once you're able to get positive return on your purchase, or be less than rent, that's an amazing opportunity. Plus, it's great for investors.
I have a great story about that, actually. So I'm not sure, my internet appears a bit sketchy, so I'm not sure if you can hear and see everything looking smoothly. But I had a client who had been saving, and I'd worked with them for about 10 years, and they moved actually out of Victoria, and they moved to another city on the East Coast, and then they moved back. But what was interesting was they were really good at saving money. But when I met them, they were paying about $3,000 a month, and this is 2019. And they were interested in this place. It was 2 houses off of Dallas Road, and it was $950 for a half duplex. And when they went to look at it, there was a suite in it. It was not an authorized suite, but the rent on the unauthorized suite was about $1,900. And we worked out, so this person had saved about $450,000 over the 10 years, like super, super great saver.
Good for
And
them.
she was paying $3,000 a month in rent. And she had never looked at the math. And I said, you know what? You're paying $3,000 a month rent. Then she was like, kind of like trying to figure out what she wanted to do. And she didn't want to be in debt. She was afraid of being in debt. Anyway, we looked at the math, and we realized that with the $1,900 and the mortgage at that point, it would have been about $3,000 a month, that she was only going to be paying $1,100, right?
Amazing.
So that was her turning point, where she was like, "Oh my God!"
And
And
that's
then
a good.
she said, "Sorry."
No, go ahead.
Well, then she's like, really close to the closing date. She goes, "I don't know if I want this. Like, I'm afraid of being in debt." I said, "I'll buy it."
You didn't, did
Just
you?
made sense. No,
Yeah.
she bought it.
I mean, I want to just sort of, I'm not an investor, but you've got to, when you do have $450,000, you have to think about the value of that money as well. Like, what can it be doing for you in investments versus in a home? But then, the great thing about real estate is generally it goes up in value over time. So it still is an investment. So if your money's going to be locked in somewhere and you don't own a primary home yet, I think generally the common thought is put that money into your first home. So
historically.
Well, and
100%.
also, if you can buy that home and then you can get a line of credit, then you can use that line of credit and borrow against yourself, then you are in a much stronger position, I feel.
Yes. Yes.
Yeah.
Yeah.
Build your portfolio.
Build your portfolio. All right, so let's go on with the show here. Andrew, how are we doing?
Yeah, how are we doing? I actually wanted to go back. Just want to go back to something you said, because I also have some clients who are coming back to town after having moved to the East Coast. They sold here. They may be listening to this show today. I don't know, but they sold here, moved to the East Coast, and found it didn't work for them, and they're coming back. Now they sold, a higher value property, and they're going to be buying a lower value property because, of course, in the move, there's been expenses and so forth. So that's a little bit too bad. But I do find, and I'm just curious what you find, that for let's say every 3 people that go to the East Coast, 2 come back. So if you're thinking of moving to the East Coast and cashing out, folks, really think about it. Do your research.
Yes, actually, one of our good friends did that. I wasn't his realtor at the time. He sold here a condo, moved to Ottawa, bought a house because it was, relatively speaking, the same price. Came back and couldn't afford a house anymore, and bought a condo.
Yeah, yeah.
So,
it's
yeah,
a big consideration. Okay,
I do find though, okay, so relatively speaking, though, like the prices of housing across Canada is evening out, don't you find?
I can't speak to that because I haven't been watching prices across Canada. So,
well, previously we used to be half the price of Vancouver. Now we're more on par. And then if you look at Toronto, we're more on par. And then I'm finding, like, even the East Coast, I've looked at the price of houses. I have a good friend there, and he's a realtor, and I'm finding they're expensive, relatively speaking. Anyway.
I do recall being able to look at properties either on the north end of the island, on the east coast of Canada, in the more remote areas of BC and other provinces, and it was, you could buy a house for $50,000, let's say, and that's no longer possible, not least anything decent. But that was why people were picking up and moving to the East Coast, because they were seeing these beautiful homes with water views or on the water, and $80,000, $120,000 on an acreage or what have you, and it was nuts.
Just to touch on a future topic, you can't build that for $50,000, right? So when you look at potential, what we're seeing with developers, future topic, this is where we're seeing a challenge and a problem.
Right.
Yeah, it's true.
Yeah, when we look at homes here, we do think about the building cost and the cost of construction, the land, the house, the asking price. Obviously, if you can buy land and build for less than the house is being asked for, you're going to buy the land and build. But there's no, yes.
So interesting. I think that it's coming down. Even the land is coming down right now, because properties, there's much more land available. When I was on the board at Habitat, we were always looking for land. We couldn't find anything. And now people have, because I guess of the rules and stuff, they've been able to subdivide. Now there's more sort of land opportunities available, and so they've become more affordable. So, but I agree.
Yeah.
The cost of the supplies are the cost of the supplies to build the house.
Right. But as land becomes more easily developed because of changes in legislation or law or zoning or what have you, then it becomes it becomes more usable but less valuable because there's more of it. The land hasn't changed. We're not, to be clear, we haven't created more land mass. We're not, building extra islands here, but the land that we do have, we can develop with more density, and therefore it's more available. Yeah. Okay. All right. So finally, after that long side note, and finally we're back to the Victoria Market Watch. What's happened in the last week? Thank you, Jane. We had 335 properties go live in the last week, 278 the week before. So we're definitely up for our listings week over week. Pretty much on par, 155 155 pending properties versus 155 the week before. Not common, we see exact numbers, but there you have it. We had the same numbers of properties go pending week over week. And then price decreases 159 this week versus 167 the week before. And 71 properties expired versus 135 the week before.
So I think that there is going to be a lot of expiries and relistings happening right now. I think there was a bit of a lull at the beginning of July after this sort of school ended and people kind of getting together, talking, and I think there's going to be major decisions happening. Jen?
Mm-hmm. Yeah.
What's the advantage of that? Like, is it because it shows up as a new listing?
Yeah, and even realtor.ca, the algorithm promotes new listings as opposed to price reduction.
Gotcha.
Jen, there's two sides to that. You know, one is we just have listing contracts that have a certain time span, and once it expires, you know, if the seller wants to continue selling, they're going to relist their property and put it back on market. So it's going to have a natural expiry and relist. Then there's also a strategy some agents and some sellers pursue where if they're looking at a price reduction or some sort of change to the marketing, they will take the listing down and then relaunch it. And so you get these less natural rhythms. But I think what Jane was alluding to in general is, you know, when you list your home for the spring market and when the agent is looking at early spring or mid-spring and looking at listing, they're probably having that listing expire somewhere towards the end of July because there's probably a conversation to be had about whether they're going to be on market through the summer. And so we probably we probably will see a lot of listings coming.
So I find we do a month or a weekly report of what's happening with our let me just rephrase that. We do a weekly report and we look at where the exposure is happening and what kind of activity we're seeing. And we also look at what's sold. And then monthly, I do a deep dive and then I report back to the clients. And that's really important because they need to see the big picture. I'm seeing the big picture every day. So I'm trying to replicate what my clients need to see in order to make a good decision. And I find right now that, you know, we have a shorter runway than we did 2 months ago. And so if people want to get their property sold, now is the time between now and the end of October to really start dialing it in. So that's what we're doing.
Okay.
Just gave away a big secret.
Mm-hmm. dropping knowledge here. Okay, well, list to sale ratios week over week because the number of pendings remained the same, but we had less new listings. More new listings this week. Our ratio went down 46.27% list versus sell versus 55.76% the week before.
That doesn't make sense.
No?
If we have more new listings and the same number of pendings, then our list to sale ratio should be different. It should be
lower. This is
lower. You're right.
Yeah,
right.
This is a smaller percentage of this. Yes.
Okay.
Math nerd. Okay, good. We're all there.
Okay, so over the past week, we've had 244 sales. That's so if we were going to do like that over 30, we're looking at less sales than we had last year at 680. New listings were at 499. That's also less than we had last year at 1,362. So I'm projecting maybe the market is settling down a bit and our total active listings have come down under 4,000 to 3,937. And that's still up from last year. Yeah.
I think I'm going to add a section to this slide. Folks, will, I hope, appreciate this, where we actually have a projection based on the current unconditional sales and the number of days in the month. So we can actually project where we might be looking for the month based on that. What do you guys think?
Yeah,
Yeah, let's do it.
Sounds
sounds
good.
like a plan.
Okay.
I do it in my head anyway.
Yeah, but you just illustrated that your math isn't mathing, so we're gonna go with the real numbers.
Okay. I am a natural blonde. What can I say? All right. Well,
So-
let's talk about foreclosures, because I did have a question this yesterday, actually, from a buyer wondering why a house in Vic West was priced at $650 and whether or not, you know, she should go and have a look at it. And she's not ready to purchase yet. So the answer would be no, because it already has a court date. So what is a foreclosure? Jen, maybe you want to talk about that.
Well, basically, when a foreclosure happens, when a client or a homeowner no longer is making their mortgage payments, it's a long process, or it can be a very long process depending on who their lender is. And then once it goes into foreclosure, the process is it gets listed for sale. People can make offers, or you can get an accepted offer on the property. You guys can talk a little bit about getting the accepted offer piece, but from the lending standpoint, we get a full approval, but there's still another step to the process where the buyers, or there could be multiple buyers, go to court and present their bids. So there's a lot of pre-work that has to be done. Appraisals are always required on a foreclosure to confirm the condition of the property. There's also an added risk there. You may or may not have a owner that is not very happy that their home has gone into foreclosure, and how is that home going to be left? So that's a concern too.
Totally.
And speaking to that, it's as is, where is what she's saying.
Right.
So
Yeah.
you don't get the appliances if the seller takes them out, and they have every right to take them out. It's their chattels.
I would take that even further and say, you're buying the land, and even the land you can't really rely on. I mean, if let's say you're buying, half an acre of treed property with a beautiful house on it, an outbuilding, and the owner, takes a sledgehammer to everything, takes a chainsaw, knocks everything down, all the trees down, and leaves the property completely different. If you've already agreed to purchase the property unconditionally at court, it is absolutely as is, whereas the bank does not take any, you are getting what you get. And that's what I think a lot of people don't really realize, is just how high the risk is when they are buying a property that is foreclosure.
The other thing is if you're fairly early on in the process, so sometimes if a property is listed at market value, you can get in there and you can get an offer in, and you can get it accepted, and it may not, it may have issues, but you're not going to have a lot of competition. The strategy generally with foreclosures is you wait and wait and wait, and then you wait for the first person to pull the trigger, and then you can go in knowing what their offer is when you go to court. But you have to go in unconditional, so you have to have all your financing, and if you want to do inspections, they have to be done before you write that offer in court. So it is risky. I've seen foreclosure where there's been fire on the property, and the back half of the house basically is uninhabitable, but the market was hot at that time, and so people were able to purchase, and obviously it was a different kind of buyer.
Yeah. I think we've talked about foreclosures in the past, but I think, I think we were all raised with this idea of, foreclosures are this wonderful opportunity to get into the housing market because you can get a great deal. And what people don't generally understand is, here in BC at least, first of all, the bank has a duty. The person who is owed the money that's conducting the foreclosure has the right of sale, has a duty to the seller, to the current owner. Sorry, not the seller, but to the current owner. And so if they listed the property, let's say fire sale, say that the lender is only owed $100,000 on a $500,000 property. They list the property for $200,000. That's not going to get past the court. The court's going to look at that and say, look, you haven't fulfilled your duty to the actual original owner here to maximize what you can get for this property. So properties generally are not listed under current value. They're not a fire sale when they're a foreclosure. There's actually higher scrutiny on it. And then there's the court action on it. And then of course, if you're buying, you've got the unknown until you've gone to court as to whether or not you were buying a property. So you could be the first person to make your offer and then find out you got sniped out of the property. Meanwhile, you've sold your home and you've got no place to live.
And the process happens fast once it goes to court. It's usually within 10 days of going to court that now you have to have the lawyer, and now the property is in your name. So there is that piece that's so important to ensure you've got a mortgage set up prior to, and money has to be put out without that knowing, for sure that you are going to be the successful bidder.
Also, you have to have your deposit ready when you go to court. So it has to be a certified check right there, ready to go, or proof of deposit. So sometimes people who are going into that process, I actually had a client who won on a foreclosure, and I had to run to the bank, certified check at that moment. So we actually wrote a few foreclosure offers for them over time, and for them it's worked because they've bought nice houses actually in nice areas, and they were all done, and there wasn't a lot of work. But that's unusual. Usually you're finding there's a reason why. There's usually strife that happens to the seller. There's a problem that happens to the seller, and they usually wait too long. I think they should just sell rather than but they're often afraid to give up their home. Andrew?
So I think where the opportunity lies is not in foreclosure, but sometimes in the pre-foreclosure, where because I've worked with sellers who there is a subjective feeling of desperation of, I just want to get out of this. I don't want to have to owe this money. I want to do this before the bank forecloses on me. There's, I guess, some pride or ego in it. Because technically, if the bank, I have actually advised clients, this is the other side of this, when they are underwater, they're not making enough to pay their mortgages, and they know they're going to get a foreclosure at some point. I say, stop trying. Just stop paying your mortgage. You're going to get at least 6 months of free living there free, and eventually the place is going to get sold out from under you, but you're not going to end up owing. Whereas if you are already underwater and that your property is worth less than you can actually sell it for today, then you might be better off to stop putting money into something that's dragging you down. If you still have equity in the home, and that's where I think the opportunity is for some buyers. If you still have equity in the home and you want to get it sold before it goes to foreclosure, that subjective need can cause the seller to sell for less than they might have gotten at court, and a buyer doesn't have to deal with necessarily the as is, where is, and with the getting sniped at court and so forth. So there's an opportunity there. The only thing I think any savvy agent really needs to ensure is that there's enough money to close and cover the mortgage. Yeah.
Well, and also pay their fees.
Well, I was going to say, exactly.
What was happening, I would say 2018, there were some foreclosures, and the value of people's houses was less than what they were paying. And that was happening. So when an agent is listing a property, you want to see if there's a certificate of pending litigation on the property, just to see if they are in foreclosure. And if they are, then you want to get that resolved ASAP. So,
And you want to
and
find
some,
out the numbers if you can.
yeah, it's hard.
So one thing you can do, which, I mean, when we list a property, when you list a property or working with a buyer for a property, in this case, working with a buyer interested in a property, and if you have suspicion that they might be underwater on their mortgage, one thing you can do is pull the mortgage document from land title office, and you will get from the bank or from land title the original mortgage document. Now it could be 5 years old, but it will give you some information, because if the property is being sold for 600,000, that original mortgage is 300,000, you're probably safe. But if that original mortgage is 700,000, you may not be.
Mhm.
So
Mhm.
it's good information. It's not timely, but it can help with some breadcrumb stuff. We don't normally pull that when we're working with buyers, because we're more interested in easements, rights of way, other encumbrances on the property. But yeah, something to do.
Yeah, so is it a good deal? The answer is rarely, I think.
It's
Yeah.
a risky.
But it's risky.
It is. It's very risky. But I guess the only thing I would add to this is the market. If we're in a market where there is foreclosure everywhere, that's where the market is depressed, deflated, and you're going to get a good deal on a foreclosure, because there's just, it's the supply demand ratio, and it's sad,
But
and it doesn't work, but that's
Yeah.
where I've seen people do well.
yeah, so the person who's going to do well as a buyer is going to have their cash ready, going to have all their financing in place, and willing to make a very quick decision about whether or not they want to move forward,
Mhm.
and makes that and can take possession in a couple of weeks once it goes to court. So
Mhm.
yeah.
Have we ever talked about the municipality sales where there's the tax sale and money is owed? Because that's another section where buyers sometimes find properties, and that's a whole other strategy and way of going about things. I don't know that we have.
I think maybe we talked about it once. So what happens is in July, if they haven't paid their taxes, are given a notice, and then usually it's in September that a list comes out, and they go up for auction. And I've seen them in Souk, and then the seller does have an opportunity to pay their taxes and get it recovered.
Yeah. So it's rare that those, I guess, really end up being sold, but it's a mechanism that the municipality has to collect taxes that are in arrears, and sometimes, again, somebody is not paying attention and the property gets sold out from under them.
Do you know how
Frankly,
many years? Oh, sorry.
I was going to say, frankly, I think it's just a way of embarrassing the sellers, because the
Could be.
addresses are published.
Wow. One thing, I'm not as familiar, or I'm not familiar with that process. How many years do you have to be in arrears for it to just 1 year?
Yeah.
Wow.
Yeah. It's like,
Which is,
hey, and Andrew hasn't paid his taxes, everybody. He lives at.
Right.
I did pay my taxes, Jane.
Oh,
No,
here's an interesting thing. We took possession in December of a condo, and you had to pay at the end of March. You had to do your declaration of the vacancy tax declaration. So we
Mhm.
received no letter, and I'm like, okay, well, I guess we received no letter because we took possession at the end of December. So then I got a demand letter to pay $3,588 for my husband and myself separately for our ownership of this condo, which we had for maybe 15 days. And if I didn't file a notice, and of course, they don't have it on, I'm trying to do this without showing the address, but they don't have it on the front. They only have the information on the back about how to do the declaration. So I was freaking out And then I realized, oh, you know what? I just have to go and fill that thing in the back. It's right here. It's right here at the very back. Didn't make sense
Well,
to
just
me.
that word demand letter. That's just annoying.
Well, they
Sure.
didn't call it demand. They called it a notice of
Okay.
assessment. And they
Okay.
blamed me, and I have until the end of June to or I received the notice June 9th.
Wow.
Yeah.
Tell us how you really feel, Jane.
I feel like there's someone not putting the dots together in government going, they only own the place for 15 days. And then I had to declare that it was vacant for 6 months, which it wasn't vacant for 6 months. So now I'm like, am I going to get charged for misrepresenting the declaration?
Right.
I don't know. I didn't own it before that.
Jeez.
I guess.
Yeah.
Yeah.
I would have steam coming out of my ears.
Oh, okay. So everybody good?
I'm
Yes,
good.
that was great. Lots of info.
Yep.
Okay. All right.
Been a bit.
Pardon me, Andrew?
I was just going to say it's been a busy week, and it doesn't feel like, for me, it feels like the buyers are out there active again. So that's been really interesting. It doesn't feel like it's slowing down for me from a buyer's perspective. Maybe I'm an anomaly. Everybody has their own market, but it's interesting how things are still flying along by all accounts from that perspective for me.
I agree.
For me, it's interesting. I'm finding buyers, like if they're interested, they are moving quickly, but there's lots of choice out there right now. So they're doing their research.
Mm-hmm.
So make your home well, people. All right. Andrew, you want to take us away?
Yeah, so we are the Greater Victoria Real Estate Show, Jane, Jen, and I. And we would really appreciate your input, your feedback. We really, again, enjoy that you take the time to be here with us. So so you don't miss any episodes, please subscribe. Please comment and share. We really want to hear from you. And we really also know that others want to hear from us. So please do share if you know somebody that's got a need to hear this.
Okay.
That's it. I'm Andrew Plank. I'm with the Vibe Collective at Royal LePage. And if you wish to reach me directly, I'm at 250-360-6106. And I can also be emailed info@andrewplank.com and the website andrewplank.com, as well as the realvibe.ca website for the Vibe Collective. That's realvibe.ca, as in real mayonnaise, I guess.
Oh, sorry. I've got a trigger finger.
I am Jen Lowe. I am a mortgage broker with Modern Mortgage Group through Dominion Lending Centers. My cell number 250-217-4925. Email is jen@jenlowe.ca and my website is jenlowe.ca.
All right. Next, I'm Jane Johnston. I'm with the Briar Hill Group at Remax Camosa and with Sean Revanche. You can reach me at 250-744-0775. You know what? The best email is actually briarhillgroup@gmail.com. And I'm going to change the slide. You can look at our listings at briarhillgroup.com. And if you want to find out about what's happening in behind the scenes in real estate, follow me at realtyteacher_remax_Victoria. And we'd love to hear from you. Alrighty. Take care, everybody. We are on every Wednesday. I'll edit this slide as well. And we're on all the time. So if you have any questions, just give us a call.
Yeah, totally.
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 All right, have a great day.
Thanks, everybody.
See you next Wednesday.
See you next Wednesday. Bye.
Thanks for joining us on the Greater Victoria Real Estate Show.
We're here weekly bringing you up-to-date insights on the Greater Victoria real estate market.
Make sure to follow and subscribe on YouTube, Facebook, and wherever you listen to podcasts so you'll never miss an update.
We'll be back next week with more clarity around what's happening and what it means for you.